If your business is making decent money, but you're not exactly sure how that's going to look once tax season hits, you're not alone. Most business owners wait until January to start thinking about taxes. And honestly, that's the worst time to start. I'm Trevor Densmore, founder of TJD Accounting Tax. We help businesses across the US get their books cleaned up, lower their tax bill, and finally see where profits leaking out and how to fix it fast. Because here's the thing, profit isn't just about revenue, it's about having clarity, knowing your numbers, and taking advantage of the tax rules while you still can. And the good news, even though you're right up against the end of the year, you still have time to make smart moves that can save a lot of money come tax season. So today, I'm walking you through 10 last minute tax strategies you can still pull off before December 31st. Let's jump in. All right, before we get into the strategies, let's talk about what's changed this year, because a lot of these moves hit harder because of these updates. First, bonus depreciation is back to 100%. That means if you buy equipment, technology, computers, machinery, or even heavy vehicles, you can deduct the entire cost this year. No more spreading deductions over 5, 7, or 15 years. This is huge for year-end planning. Second, the IRS audits are getting smarter. They're using AI to match your books, payroll, 1099s, and tax returns. So if something doesn't line up, you're a lot more likely to get flagged. Third, 1099 reporting thresholds have changed. A lot more payments now need 1099s, and penalties for missing them have gone up. And fourth, pass-through business owners are under more scrutiny. If you're an S-Corp owner, your salary has to make sense for what you do. If it doesn't, the IRS can reclassify income and send you a nice little bill. All right, now that you're caught up, let's talk about the moves you can still make right now. The 10 last minute tax moves. 1. Not prepaying deductible expenses. A lot of business owners don't realize you can prepay certain expenses and get the deduction this year. Here's what to do. Prepay rent, utilities, insurance, software, anything you know you'll need in the next few months if you're a cash-based business. 2. Not taking advantage of 100% bonus depreciation. If you were planning to buy equipment early next year, this is the time to do it. Here's what to do. Buy qualifying equipment before December 31st so that you can write off the full amount. 3. Unpaid vendor bills sitting out there. If you owe money to vendors and you're a cash-based business, you're missing deductions. Here's what to do. Pay any vendor bills you can before year end to get the deductions this year. 4. Falling behind on retirement contributions. This is one of the easiest legal tax shelters for business owners. Here's what to do. Max out your SEP, IRA, solo 401k, or your traditional retirement accounts if cash allows. 5. Not writing off bad receivables. If you're accrual basis and still have unpaid invoices from ages ago, you don't have to report that as income. Here's what to do. Review your accounts receivable and write off anything that's clearly uncollectible. 6. Inventory that hasn't been evaluated all year. Dead inventory inflates your profit on paper. Here's what to do. Write down slow-moving, damaged, or obsolete inventory before December 31st. 7. Owner payroll isn't aligned with IRS rules. Most S-Corp owners either underpay or overpay themselves. Here's what to do. Check your salary against what the IRS considers reasonable compensation and fix it before the last payroll of the year. 8. Year-end bonuses weren't planned. Bonuses paid in January don't count for this year. Here's what to do. If you want to deduct bonuses, they need to hit payroll in December. 9. Your books aren't caught up. And let's be honest, this is most business owners' biggest issue. Here's what to do. Get your accounts reconciled, categorize everything, and fix any obvious errors before January hits. 10. No year-end tax strategy review. This is the step that separates businesses who overpay from businesses who pay the minimum legally possible. Here's what to do. Review income, expenses, entity structure, estimated payments, and your tax bracket right now, not during filing season. If you're still watching, you already know this stuff matters. Most business owners don't overpay taxes because they're careless. They overpay taxes because they waited too long. At TJD Accounting Tax, we help business owners tighten up their books, clean up messy financials, cut unnecessary expenses, and reduce taxes legally without stress. If your business is doing well, but you're tired of feeling like your tax bill runs the show, this is your chance to get ahead of it. Click the link in the description to book a free year-end tax strategy call. We'll review review the numbers, look for anything you can still do before December 31st, and give you a plan to reduce your tax bill fast. Don't wait until January. By then, the door closes. Let's get your year-end strategy locked in now.